Okay, so going back to the business organization. So now that we learned all 5 different types of organizations, correct? Now, for this class and for this class only, right? We are only in the beginning level of our introduction, right? What I need you to know is for this class, we are only solely working or looking at a sole proprietor's perspective as a business, right? We're only focusing on small businesses, one person kind of owning the business. We're not looking into partnerships, we're not looking at corporations, and we're not looking at, of course, nonprofits because they function completely different, and we're not looking at LLCs. We're only going to be focusing on sole proprietors, okay? And that's just for this class only, okay? For more advanced leveling, of course, if you like to pursue more advanced accounting, again, you may have to go opt out into another, or not opt out, sorry. You might have to go look into maybe going into some college courses that are available. And even if you would like, if you're really curious about how business is run, right? So when I went to school, I was actually learning private and corporate at the same time. So I learned a lot of different terminology, and even coming to this class, right, there's some newer terminology that I've actually looked at when I first dove into the private sector. I have found out there's a lot of terminology that is used to associate the difference between private and corporate. Okay, but with that being said, again, if you are more interested, if you go into on YouTube, everything that you see is going to be 100% geared towards corporations. All right, because then again, and we'll talk about the different areas when it comes to businesses. Okay, so business activities, again, there are 3 types of business activities. Okay, number 1 is going to be service, right? So providing a service entails, right, you're not selling a product. What it really entails is it's how much time you're investing for a service to complete, right? And typical businesses that are service based could be anything from, a telephone service or like a cable company, right? Accountants are service based. We don't sell a product, right? We sell our time to either advise or even to produce your taxes for you, right? Other places are like masseuses, right? You go in there and they give you, they charge you based on an hourly rate or whatever it is. Maybe it's one service charge only. And again, you get the job done and they don't provide any products for you to either take home or to have. Okay, so those are examples of what a service company does. It is ultimately to selling basically a service that involves time. Now, the other one is going to be looking at is going to be merchandising companies, right? And this is where our main focus and what we're going to be looking into as our sole proprietor aspect, right? We're going to be looking into how to sell a product, how to make the purchases of those inventory items, and lastly, how to convert those sales into actual cash and make a profit. So that's what we're going to be looking at. We're going to be looking at merchandising. And of course, examples of merchandising, right? It's typically retail stores, right? Anything that sells a good to individuals, whether it's the public or whether it's to individuals, right? So again, typical is going to be a grocery store, a clothing store, a shoe store, anything that sells something that you can actually physically use, a product. And then we're also looking at wholesalers because they sell goods to the individual, but in large quantities. But they also sell it to retail stores too, right? A typical example is going to be Costco, right? Winco, right? Right down the street from right here on Rainbow, there's Winco, right? It's things that they sell in large quantities or in bulk. And they have the choice to either sell it to the local retail stores that sell those products on an individual level, or they can sell it to the public, right? So again, Costco, you can anybody can have access to a Costco card, right? Any consumer, as long as they pay the membership dues, they can buy in bulk. And usually that's typical for families that have, maybe a lot of mouths that they need to feed. So buying things in bulk is actually more cheaper than it is to buy on an individual scale. Okay. And then lastly is going to be manufacturing companies. So again, this is where we're dealing with making purchases of raw materials, and the end result is to produce, basically take those raw materials and create and produce the actual product at hand. So a typical example would be a car dealership or a car manufacturer, right? They buy the scrap metal, they buy the plastic, they buy the glass, and then at the end of the day, what they do is they make the car, assemble the car, and then ship it out to the car dealership to sell the product to the consumer. All right? Again, that is a perfect example. So anybody that creates a product is going to be a manufacturer. All right? So again, out of the three, our main focus in this class is going to be looking at us producing, sorry. We're going to be buying a product from someone else, whether they're a wholesaler or the manufacturer. We're going to purchase from them, and we're going to either package it in our own packaging and sell it out to our consumers on a public scale. All right. Now, if you are interested in learning manufacturing, again, that is going to be level number 2 for accounting, right? The next thing would be cost accounting, and I'll talk about that in maybe about 2 minutes or so. Okay? So, we're going to be looking at accounting in general. First off, well, what is the definition of accounting? Accounting literally is a systematic process of analyzing, recording, summarizing, reporting, right? Reviewing and interpreting financial information. So anything that has to do with the business transaction, right? It will answer these questions here. What did the transaction happen, right? When did the transaction happen? Why did it happen? And how did it happen? All right. So you're going to be answering those 4 questions. Now, you're thinking, what about the where? I mean, that's pretty straightforward. You're going to be given that, obviously, especially when a transaction happens. You're going to know exactly where this transaction happens. But the purpose of producing or even doing accounting is to ultimately create financial statements. All right. And with this, when we interpret our information and we convert it into a financial statement, it is for 2 people or 2 groups of people. And that's going to be 1, your internal users, or 2, your external users. Now, when we look at this information, right, our internal users is going to be anyone that's within the company. So your employees, your management, whoever is involved in your company. So again, understanding how these transactions affect your business is definitely going to be something that the internal users would want to know. For example, by me producing this product or me selling this product, am I actually making a profit? Am I lowering my costs enough for me to make the maximum profit, right? And your internal users would use the information that the accountants produce in order to make projections in the future, right? Or they can either take that, with the money that they're making a profit off of, they can explore the options of maybe reinvesting into the company, either doing renovations, XYZ, right? So all these pieces of information in the end result for the internal users is going to be very useful, right? Your external users are going to be anyone that's outside your company. So for example, especially when you're a small company and you're looking for a bank loan or something like that, something to help your company be able to, have the funds, the sufficient funds in order to operate, right? So what you can do is you can produce a financial statement and go to the bank, right? And the external user would be the bank person who's going to be reviewing your financial statement. They're going to look at seeing if you're, are you paying your liabilities on time? Do you have any liabilities, period? Is your company profitable? And if it is, then I would definitely approve of you for a bank loan. So people who are outside the company, right? They could be either an investor, there could be people that want to invest in your company, or people that are, like, for example, like I said earlier, a bank loan person, or even a regular loan person, right? They can look at your financial statements and interpret it whether your business is qualified in order to get those kind of extra funds, all right? Also for even people who do invest in your company, right? People who are if you're a corporate standpoint, your external users are going to be people who are not part of your company, right? Other people who are looking to buy stock and they look at their financial statements, they're like, okay, I guess this company is worth investing in. So those are what the two groups of people that you would want to produce the financial statements for. Okay? Now let's go ahead and talk about the bookkeeper versus the accountant. In this class, you will learn to become both the bookkeeper and you're also going to learn how to be the accountant. Okay? So if I had to just tell you the fine difference between the two is the bookkeeper, all their main task and duty is to record business transactions. All right? The accountant pretty much does everything else, including recording transactions. So in this kind of sense, the bookkeeper, their only main job is to be able to do the recording the transactions, recording the books. The accountant can also be the bookkeeper, but the bookkeeper cannot be the accountant. All right? And I'm going to explain why. What the accountant does is beyond the duties of what a bookkeeper can do. The accountant makes up the rules and the regulations for the bookkeeper to follow. They are also the ones who create the financial statements. They're the ones that get to interpret the information. They're the ones who get to create the financial statements, which again, they get to analyze. They get to make that projection. They get to create those financial statements. All right? And they get to pretty much do all that. And they also they can do the responsibilities for the bookkeeper. Okay? That's the main difference, okay? So again, the bookkeeper only can just record the transactions. They cannot ever be the accountant. But on the other hand, the accountant can be both the bookkeeper and they do more than just do bookkeeping. They're the ones who establish the rules on how to journalize XYZ. So they do beyond more than the bookkeeper. But all in all, that's all you need to know. Bookkeeper has only one responsibility, while the accountant has many responsibilities. All right? Now we're going to be looking at the types of accounting. All right, so this is where I was talking about the different types of accounting, right? When we're talking about how many hats you can wear. Depending on what area you belong to, this is what I mean, that you could be flexible when it comes to an accountant. All right, so let's focus on each area and I'll explain as I go forth. All right, so the very first area is going to be public accounting, also known as CPA, right? So if you do pursue your CPA license after taking the private classes, taking all your other classes that you need in order to be able to test for the certification of public accounting. That's what CPA stands for. Then you can go ahead and you can be able to do all of these different hats here. So with a certified public accountant, again, you're looking at primarily publicly traded companies, meaning corporations, all right? And what that entails is going to be hugely a part of auditing, right? Being able to backtrack corporations' transactions and making sure that they, follow all rules and guidelines, okay? Second area is going to definitely be taxation, all right? This is key. Most CPAs will, in fact, be geared towards taxation because, again, there are a million companies out there. They need the big guys to be able to do their taxes, okay? And then the other one is called forensic accounting. So forensic accounting, I'll go ahead and give you a little scoop in forensic accounting because I actually got the opportunity to take this class in my college years, okay? So what forensic accounting does is it's pretty much like investigating, especially the financial statements that corporations put out. The cool thing about that is that you get to look at accounting in a completely different way. You're analyzing, you're investigating, you're tearing apart a transaction to truly understand, is there room for a corporation to have fraud? And that's what that section of this part is. If you're going to have someone who's going to audit your work for you, and you have someone who's going to file your taxes for you, you also need someone to investigate in case, right, there's something fishy going on with your statements. Like, again, and this is exactly why I explained earlier. Oftentimes, because corporations, they have that big, huge pot of money, right? It's a $1 billion company. You never know what they're really doing with the money that is being poured into the company, right? They can be phishing you. They could be frauding you. They could be telling you all these things that they're doing, but are they truly, really doing it? And that's where forensic accounting comes into play. They go in and they investigate to see what other red flags that they have. Why is this scandal is happening? Okay, so with this opportunity, if you guys would like to pursue for CPA, right, I would recommend to do forensic accounting because you're going to be taking everything that you know about accounting and look it through in a microscope way. You're going to analyze, you're going to interpret, you're going to tear apart the transaction, and you're going to see if there's any red flags that could trigger fraud. Right? Really, really fun class. Okay? Any questions in regards to public accounting?
Nope. I get it.
Right. Okay. Now, this is where we belong. We belong into the private sector because what the private sector does, or the private accounting, right? You can use either or. We're dealing with businesses at a smaller scale. Okay, so again, public accounting is looking at the publicly traded companies. So corporations, LLCs, any of those jazzes, they're going to be dealt with on the public accounting. For private accounting is on a smaller scale. We're looking at smaller businesses that are either sole proprietor or partnerships or even small, LLCs. Not too big yet. So with that, there's actually a lot more hats than you would imagine. Okay. You could also, with the assumption that you can do this for public accounting, you would also apply it here for private, right? For example, yes, you can have a tax accountant to do private companies, tax books, whatever you want to call them, right? You can have a person like that. You can also have someone that audits them as well, right? But beyond those, two different types of accounting there, you can also have financial accounting, which is exactly what we are in the business of, right? That's what this class is about. We're all about financial accounting, which is basically allowing you to collect the information, record it, and to interpret it in some kind of manner to allow us to produce financial statements, right? We're doing the very, very, very basics of all of accounting. We are the foundation, we are the very beginning of accounting in general. Once we've done that, okay, so again, that's financial accounting. Then you have managerial accounting. So what falls under that is you can have you can analyze the financial data, okay? But with this one, you're going to be looking at either cost accounting, right? Which is this is more for manufacturing, right? Finding the lowest cost to produce an item, right? But you're also micromanaging it to a point where you are actually calculating things that involve into producing a product, such as labor, such as all the raw materials it takes to create the product, right? How much time is involved in creating the product, right? So that's where cost accounting is. You can also look into budgetary accounting, right? So if your company is working on a budget, right, in order for you to meet your demand, right, you need to make sure that your budget for the cost of your items is within its window for you to produce the product and make sure when you sell it, you meet the demands and that you're not at zero, you're at a positive number. Okay, and then green accounting. Okay, I'm not quite too sure on exact details of green accounting, but it's definitely for those companies that do invest in giving back and contributing to society and properly doing it, economically in an environmentally, I guess, manner, environmentally friendly manner, right? Green accounting. Um, and then you have treasury accounting. So again, this is for example, banking. So if you've done banking before, you have been doing treasury accounting, right? Making sure that whatever money is going through, that it's also, you're also in return making sure that every dollar that is involved in banking, whether it's you doing a business loan, whether, anything that has to do with the bank, you've done treasury accounting. And then lastly, financial planning and analysis accounting. So again, that's going to be looking at returns on investment. So again, if you're in the business of looking at profits or even just projections for the future, you would definitely be part of this team right here, or this counting, right? And as for small businesses, what you're going to notice is that you're more likely to wear multiple hats, okay? You might be in charge of accounts receivable, accounts payable, payroll, right? Okay, so that is okay when it comes into the private sector, just because, again, as a small business, you may not be able to afford 5, 6, 7 different people to get your accounting done. So you divide up each task, right, to those individuals and say, hey, you're in charge of accounts receivable, you're in charge of accounts payable, and you are in charge of payroll. Pretty straightforward, right? You may have more duties than you may be asked for, right? Okay, any questions in regards to the private sector or the private accounting?
Nope. Nope.
Okay. Okay. Now the next one is going to be government accounting. Again, this is dealing with the federal agencies or even state, right? So any budgetary money or a budgetary management would definitely take place because, again, government agencies, right? They're funded primarily based on the government, right? You're given a certain amount every year. And what you do with that money is you need to have some kind of budget manager to be able to distribute the money across whatever that needs to get done, right? For example, most of you come from WIA funding, okay? And what WIA funding is money from the government that allows each and every individual the opportunity to get funded to in order to take these classes so they can get a job in the future. And that's exactly what, so there needs to be someone who manages that, right? They're the one who's budgeting, saying, okay, I have $15 million. How many people can I serve, right? If I have a cap that each individual gets at least $10,000 individual. So then I can go ahead and do my calculation, right? And I'm going to distribute it based on, okay, which area, which state needs more unemployment. Okay, that's an example. Other things that you would see is focus on funds that are from the government. So other things that could be agency funded management. So again, dealing with federal, depending on what the agency is, and making sure that you have the funds for it. Okay, and again, if you go into the sector, their rules are completely different as well because the way that they're getting taxed, obviously you can't tax the government because the government is taxed. So you know what I mean? So there's different ways around on how you can do the accounting for government. Same thing with nonprofit, right? Nonprofit, what you typically would see is also another budgeting accounting because again, with nonprofits, they're not in the business of making money. They have limited amount of funds, right? Whether they get donations, contributions, XYZ, whether they get a federal grant or not, they are limited on how much money that they can spend in order to do their operations. So they definitely need a budgetary accountant. They also need a funds management accountant, right? People who are in charge of finding those funds, right? And how can they properly manage it? They are the one who's going to organize these either fundraisers, donations, or, they're the ones that are going to be doing that. And then lastly, business transactions that are going, that are focused on more on funding, okay, from other people. Okay, so those are examples of nonprofit organizations. Right? And then lastly, we'll talk about the international accounting. Okay, so after this slide, we will learn that there are rules and guidelines in other countries. And of course, if we're like McDonald's and we franchise or we expand overseas, right, we need someone who's professionally, certified in the other rules in that are in the international rules, right? Because again, foreign companies they abide by a completely different set of international accounting rules. Okay, and we'll talk about one in particular. But in this case, you definitely need to hire someone who is going to be professionally, being able to have that knowledge for international purposes because, again, They follow completely different rules. So you will see you'll have a foreign currency manager. You'll have a region aid accounting. Okay. Right. And that's it for those areas. Again, we are in the private sector. All right, we're dealing with small businesses at a grander scale because we in this class is only learning about sole proprietors, which we ourselves is going to be looking at a standpoint of us being the owner of the company. All right. Now let's go ahead and talk about financial reporting. So again, with financial reporting, there are 4 different financial statements that we will get to look at. We will get to look at the first one, which is the income statement. Pretty straightforward. It pretty much tells us whether our company has made a profit or a loss. So hence, another terminology for the income statement is called the profit and loss. All right. So this is where we outline all of our core revenues, and we subtract them against all of our main operations, right? Main expenses for us to operate the business. So with that being said, when we take our total revenues and we subtract all of our total expenses that are involved in the company, then we determine whether we made a positive number, which is a profit, or a negative number, which is a loss. Okay? And that's what this statement is. The next statement is going to be the owner's equity. Now, when we talk about owner's equity, right? If we make a profit and we choose to reinvest in our company, therefore, we're going to reinvest in our equity. All right? We're going to change the value of the company, right? Other contributing factors are going to be whether we have capital contribution, meaning did we invest our own money into the company? And then other ones are going to be whether we taken money out of the company, so whether we made a withdrawal. And that's going to determine the value of the company, and that's what equity means. Equity means your total value of your company. Okay? Then we're going to be looking at our balance sheet. So here is our first thing that we get to look at, which is our accounting equation. All right, so that's what the balance sheet determines. The balance sheet determines whether the accounting equation holds true. Does your total assets equal your liabilities and your owner's equity? Right? So we're going to create that little calculations. We're going to find our total amount of assets, and we're going to equal them against our total liabilities plus our equity to make sure that our accounting is accurate and that we did it correctly, and that our accounts, they balance, hence called the balance sheet, because we're trying to weigh out, does the total amount of items that we own for the company reflect how much we owe as well as how much the company is worth. All right. And then lastly, the last statement that we will see is going to be the statement of cash flows. So what this actual statement really means is, does the company, right, how much cash is actually flowing into the company and how much cash is flowing out of the company. And we'll talk about how this affects, especially when you choose between the cash basis and the accrual basis. When we're doing accrual basis, right, we allow our customers to owe us money, but it also allows us as a company to owe other companies. So in terms of that, right, we're also, when we're in accrual basis, we're collecting IOUs. Now, because this is called statement of cash flows, can we count those IOUs as us having physical cash? In that kind of sense, no, because in that kind of sense, right, we have IOUs, we have paper, but is it truly cash? So that's why we're going to take, so when we talk about this, when we're going into our when we dive into our fictitious business and we actually complete the financial statements, we're going to actually take a glimpse of how we convert accrual basis to cash basis. Again, because essentially we're looking at how much actual money, like actual physical cash, is actually in our business and how much is actually being spent out for the cost of doing business. Okay. Any questions in regards to the 4 financial statements?
I have nothing yet.
Okay.
Nope.
Okay. So now we're going to talk about internal controls. All right. And when we talk about internal controls, right, we are looking at this rule, right? And basically what it does is you need to have separation of duties when it comes to doing accounting, all right? And what this is, so I put a picture right here of this is what I mean by having internal controls. You're having separate departments be able to take care of a certain section when it comes to accounting. Because the dangers is if one person is in control of every aspect it is for accounting, they're more likely to be the ones to do fraud. And that is exactly what this is. Having the separation of duties, right, allows you to ensure the accuracy of accounting and to ultimately prevent from fraud from occurring. Okay? And again, this is all governed by the Sarbanes-Oxley Act. And did you know the Sarbanes-Oxley Act started all because of that Enron? If you guys remember who Enron is, they're the ones who were, charging ridiculous amount of money for electricity. They were a monopoly, right? They bought out General Electric. They were in control. And because they were trying to fraud all the Americans by, putting their power out in odd hours of time, therefore they're trying to rack up how much money that they can collect. And ultimately what they were doing is, again, we talked about those big 4 I don't know if we did or not, but one of the big 4 trading publicly accounting agencies, right, Mr. Arthur Andersen, was the culprit and the person who in terms cooked the books for Enron and made them look perfect, right? Everyone was investing in Enron, but the one thing that they didn't understand was if Enron was making so much money, where was the dividends? Where did the money go? And that's why now the federal agency is involved with these corporations because of that reason. And that's where the Sarbanes-Oxley Act has, they came into play. They said that all businesses nowadays need to have some form of internal controls, right? So for example, I'll give you a good example of an internal control. Person who's doing payroll, right? They could very in fact be the employee themselves. But what they need to have is they need to have the president sign the checks. Okay? So that means the president themselves, they cannot be the accountant of their own company. All right? Make sure you know that if you own the business, you need to have a separate individual to do the books for you. You cannot do it yourself. But what you can do is you can check their work by, obviously, because taking this class, you're going to have a general knowledge of how to do your own accounting. And you can also see their work too. Are they frauding you? So that's the cool part about that. But however, you need, there's multiple steps in order to have a task complete, right? It's not one person does everything. You need multiple people to be able to do everything. Okay? And that is it for chapter 1. So here's a little chapter 1 review here. We talked about the nature of a business. We talked about the five different business organizations. In this little review, I only took the really most important things, right? Basically, key characteristics of each aspect, right? So in case, for this example, sole proprietor is one person. Partnership is at least 2 or more, right? And the 2 different types. So I only took about very key points to know the difference between each organization. Okay? And then we also talked about the 3 different types of business activities. We talked about the 4 different type of financial statements. We also talked about the 5 areas of accounting, as well as the difference between the bookkeeper and the accountant. And lastly, of course, what we all came here for is the definition of what accounting is. Okay? Any questions in regards to anything that we learned in chapter 1?
I have nothing so far. I'm sure I'll have more the more we get involved with stuff. Right now, I have no questions.
Good. Good. Nilo? Sorry. Anybody else? Michelle, did you have any questions?
No, I'm good.
Okay.
No question.
Okay, perfect. All right.